everyone. Thanks for joining in. Welcome back. And it's obviously going to be a very important NFP. A lot hinges on what's going on for tonight, and definitely want to spend a little bit more in terms of what the potential scenarios is. Audio seems to be good. All right. And we're going to get started for tonight, obviously. This is going to be our news trading session number 1. We're going to start with the Nonfarm Payroll. Next week, we're going to do our theories on Tuesday, and then on Friday, we are going to continue on with the CPI numbers. Okay, my name is Virenjaro. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be very attentive when determining the volume of your transactions and consider all possible risk factors. Okay. All right, this is going to be bonuses for participants as per usual. I'm going to show you the promo code soon, and you should already have access to the private Telegram channel if you registered through the website via email. And if you've attended this before, you're already part of the Telegram group. And since we've done this for so many months now, I would assume most of you have already been a part of the Telegram group, right? Where we actually post a lot of trade information, also a lot of the analysis out there. Okay, this is the code. It's Nonfarm 2024. We still have a couple of months to use the code. It's valid until the 31st of December 2024. So make sure you are using the code when depositing into your Octa trading account to double your deposit bonus. Okay. All right. Just a little bit about myself. And my name is Virenjaro. I've been a full-time trader for over 20 years right now. That's full-time over 20 years. Obviously, when it comes to trading, it will be what, 23, 24 years now. Okay, I've also been a professional trading coach and technical analyst since 2007. My field of expertise is in the Ichimoku Kinko Hyo techniques, and I've been invited as a guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Associations. All right, cool. Theory. We're going to go through the theories. So we're going to go through who the BLS is, what are we looking out for, simple stuff. But I'll try to get through this as quickly as I can, because I do want to spend a little bit more time in terms of talking about the strategy and also the scenarios. We're going to tackle this slightly different. I don't think there's a lot of stuff that we can actually use the straddle for tonight. All right. So let's go with the theory. What is the Bureau of Labor Statistics, or who is the Bureau of Labor Statistics? They're basically the federal agency that collects and disseminates various data about the U.S. economy as well as the labor market. Its reports includes the CPI as well as the PPI, which is going to be released next week, which is also considered to be important measures of inflation. Now, within the labor data itself, the most interesting aspects are obviously the number of people employed outside of agriculture, which is non-farm payroll, and the unemployment rate, which is going to be, again, the main focus for tonight. So at the beginning of every year, the agency basically publishes a calendar with the release date for the entire year. Really hard for you to actually miss when the labor data release is going to be, because it's usually published every first Friday of the month, with the exception of March, and if it falls on a public holiday. But yeah, exception for March, it's usually on the second week, on second Friday of the month there, which is on March, right? That's due to February being a shorter month. Okay. Other than that, everything else, inflation data, CPI, PPI, typically published on the following Wednesday after the labor market data is actually released, and that's basically what we're looking at next week, which is going to be on Wednesday for the CPI numbers. Okay. So what is the NFP, and why is it so important? So the NFP, it's a report that's released monthly by the BLS, measures the number of jobs added or lost in the U.S. economy every month, obviously, except farm-related jobs, private household employments, and non-profit organizations. So market analysts and investors usually look for NFA figures to be above 200,000 as for a positive sign and a healthy job market and a growing economy. However, again, the interpretation of the NFP data can vary depending on different economic factors and context it is released in. For this one, I'll explain that a little bit in the scenario, but, I think the market is probably looking at 165,000 as kind of the cutoff level instead of the 200,000. But yeah, if we get any surprise to the upside, anything above 165,000, that would actually be considered positive for the US labor market. Okay. So again, this is crucial. It is a crucial indicator. A figure that falls below market expectation may be viewed negatively, and while one that exceeds expectation is viewed positively. So this is one of the most important data release, especially for forex traders. Currencies like the Euro USD, dollar yen, or dollar Canadian, Aussie USD, anything that has US dollar in there is going to exhibit high volatility in response to the report release. Okay. Now, one thing to note here, typically during the NFP release, we do see a lot of noise in the market. We typically could find ourselves in a whipsaw, but that's basically what it is. So I think the whole takeaway is, if you get in, we try to get out, and unless we can position it into something else, something that we're looking at tonight. So the BLS itself, the non-farm employee classification, basically account for approximately 80% of the business sectors, contributing to the GDP numbers. So if the labor data it's bad, we could potentially be looking at an economy that has a slower growth, or an economy that's actually weakening itself, right? So it's something that a lot of traders are going to be focusing on. Now, the other set of data is obviously the unemployment rate, and this has basically been the main focus for what's been going on this month. And throughout the sessions that we've done this year, the cutoff limit of, as I always say, it's the 4% mark. Once it exceeds 4%, then we're looking at a little bit more of an unstable labor data. It is a weakening labor data, and that's not something that's the FOMC desires at this point in time. So with the Jackson Hole Symposium, so we have experienced a crazy August, all right? Post Jackson Hole or during Jackson Hole, we have that confirmation that the FOMC has now shifted focus from inflation to figuring out what's going on with the labor data, right? They don't want to get it bad. They don't want to worsen things, and that's the reason why they are probably going to be looking at interest rate cuts. A little bit about interest rate cuts. This is going to be, again, the main focus in terms of what the market is actually going to be looking out for. And on the 18th of September, that's when the FOMC meeting is going to be. They are going to be cutting interest rates, right? It's pretty much a guarantee that they will cut interest rates. The question for tonight and the impact from the labor data today is whether or not they're going to go with that 25 basis points cut, or are they going to go with a much larger cut at 50 basis points, okay? So let's go back to the unemployment rate, talk about unemployment rate a little bit. It is calculated in percentage point, and it is published at the same time as the NFP numbers release. So the unemployment rate represents the proportion of the labor force that is currently not employed but is capable of being employed. Okay, so U.S. unemployment rate is actually determined through a survey of approximately 60,000 households. I know it's a very small, kind of survey pool we're looking at here, to kind of just say, all right, this represents the whole of America, but it is what it is. It's always been 60,000 households. And according to the U.S. Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria. Number one, they must be without a job. Number two, they must have actively looked for a job in the past 4 weeks. And number three, they must be available to start a job if offered one. Now, if a person doesn't meet this criteria, they're not considered unemployed for the purpose of calculating the unemployment rate. This actually links back to the weekly unemployment claims that always move the market, because for the survey in terms of the pool for the survey, that's going to be taken from people that actually claim unemployment benefits, right? Because they basically need to register to center and say, hey, I don't have a job, but I'm looking for a job. Can you guys help me find a job? And center is going to help them find a job. So if they were offered a job, they have to take it. Okay, so this is where we get these numbers. This is where we get these people being surveyed for the unemployment numbers. Okay. So the other set of data is obviously the average hourly earnings. This is not going to be the main focus for tonight, but it's always good to understand what it is. The U.S. average hourly earnings data is basically a report released monthly, also by the BLS, alongside the unemployment rate, and it measures the average hourly earnings surveys of businesses across earnings of workers in the U.S. economy. The data is collected through surveys of businesses time earnings. Economists, investors, and traders closely monitor this report as it can offer valuable insights into the state of the U.S. economy and its potential impact on inflation. So this has something to do with more on inflationary pressure rather than the health of the labor market itself. So when trading based on the average hourly earnings, the traders often scrutinize changes in wage growth rate compared to previous months, as it can signal shifts in the labor market and potential inflationary pressures. Again, this is linked more towards how inflation numbers are actually going to higher average hourly earnings. Typically, it leads to a higher inflation because people has more buying power, they earn more, so they're likely to spend more as well. Okay. So higher than expected wage growth may indicate potential inflationary, which can result in higher interest rates and currency appreciation. And again, conversely, a lower than expected wage growth rate may indicate weaker inflationary pressures, which may lead to a lower interest rate. And for the context, it's not going to be important for tonight. This is not going to be the main focus because whatever the CPI is, the rate cut is still going to happen. All right. I think the main focus is going to be the labor data. In fact, if the inflation number continues to pick up next week, we're still going to get that rate cut. Depending on how extreme that jump is, people might change their mind from today until Friday on next Wednesday. But yeah, 25 basis points, that's already been priced in 100% in the market. And this is the reason why we need to look at some of the scenarios here, because things can change drastically. Okay. All right. So a couple of strategies that we can use to trade non-farm. We're still good on time. You can do a pre-NFP trade, so you might have already opened a position from Monday or maybe from last week, and then you should be closing a position right now because you basically want to trade based off the expectations for tonight. So it basically involves opening position in the days leading up to the NFP release. But once the NFP is about to be released, you need to close your position to avoid extreme volatility that can actually follow through. Okay. The other thing is typically what we use, but we're not going to be employing that tonight. Maybe there's going to be a couple. Maybe Aussie USD, Pound USD, and we might be able to employ the straddle strategy. But it basically involves placing two pending orders, a buy stop and sell stop, above and below the current market price just before the NFP release. That way you can potentially profit from a strong price movement in either direction. Once one of the orders is triggered, you need to immediately cancel the other order to avoid being exposed to further market fluctuations. Okay, so just keep that in mind. There are some rules with the straddle strategy, and typically we want to see a market that's traded in a sideways market. It's kind of taking a little bit of a breather. That's when we can actually employ the straddle strategy. But you guys probably looking at the market this week and today. The market has already moved in ahead of time, right? Because we have a really weak ADP number last night. And in terms of the JOLTS job opening numbers, which was released on Wednesday, was a little bit of a disappointment as well. Weekly unemployment claims was okay. It wasn't that bad. I think we were actually looking at improvements in the weekly unemployment claims, but market has been kind of get scared off by the numbers from the ADP last night, as well as the drop in the JOLTS number, and they already started pricing in for a potentially bad NFP numbers, and for the FOMC to start cutting 50 basis points. But things can change. It can change really quickly, and that's the reason why we need to go through the scenarios tonight. Okay, I'm trying to go through this as quickly as I can, so there might be some questions on the chat, but I'll try to answer that once I talk about the scenarios. Okay. The two other strategies that we can use for tonight would be to fade the initial move. I don't think we're going to be looking for a fade tonight unless we have a mixed data, but fading basically means that the initial market reaction, typically it's very short-lived, and there's a lot of noise. As I say, there's typically a lot of noise, and market typically comes back to the range before eventually going in the initial direction on the days ahead. So we'll try to see if we can get a fade, but I don't see the likelihood of us doing a fade in the market, right? So yeah, this will come back to this. If we can get a fade in the market, we'll try to get a fade in the market, but this would only happen if we have a mixed number. The other one is obviously post-NFP trading, and this is basically what about maybe 70% of traders out there in the whole world are doing right now. NFP number, because whatever number is tonight, it could actually reverse the market immediately, and obviously it's such a huge thing because, in all honesty, as I previously mentioned in the outlook, all traders right now wants a bad labor number, right? Because that bad labor number would actually give the market a confirmation to start pricing in for a 50 basis points cut. And that has not been fully priced into the market. 25 basis points, I think that's 100% priced into the market. But for the 50 basis points, we require that confirmation that labor data is actually deteriorating. And if the number is really bad, I think that would actually be an easy trade for us tonight. So, with all due respect, am I looking for a good labor data? I'm actually looking for a downside surprise on these numbers here, okay? Okay, so this are going to be the expectation for tonight. The NFP numbers, obviously, last month was a little bit low, 114,000. Market is expecting 160,000. Do keep in mind, though, the forecast is actually 120, so there's actually about 40,000, give or take, in terms of the difference between the forecast and the consensus. So things can go really wrong tonight. And the unemployment rate, last month we have 4.3%. Market is, being extremely optimistic that they might actually see the unemployment rate drop down to 4.2%. But there's actually a higher probability it could actually stay at 4.3% or even not just 4.4%. And if that's the case, that's where we prepared the scenario for tonight. Now, let's go with scenario number one, where we have a weak labor data. And that would be the NFP number below 165,000 and the unemployment rises, okay? So if the impact on the Fed for this one here, if the NFP numbers come in lower than they expect, 165,000, and unemployment continue to rise, it will likely increase the odds of more aggressive 50 basis points rate cut. Weak job growth and softening labor market could reinforce concern about economic slowdown. Have a strong labor data. The NFP comes in about 165,000, or the unemployment drops significantly, then that would be a stronger than expected labor report that would challenge the case for aggressive rate cuts. In this scenario, the Fed may lean towards a small 25 basis points cut or even consider delaying further cuts until more signs of economic weakness emerge. I would say they will still cut 25 basis points, but they might delay some of the expected rate cuts for 2024. So the expected rate cuts by the market in 2024 is either for a 75 total basis points or 100 basis points in 2024, okay, starting from this month, okay? Now, obviously, if this scenario happened, the dollar would actually rebound, right? The dollar will actually gain strength. Market is going to scale back the expectation for a deeper cut. Remember, right now, the market is pricing in aggressively for the rate cut to happen, more aggressive rate cut to happen. If turns out that the labor data is actually stable, is actually not as bad, and last month's number we got revised up or whatever, that could actually cause the US dollar to be to rebound, right? It would make a case for a stronger US dollar. So be very careful on this one here, because the reaction to this one here is that it could push the Euro USD and the Pound USD to the downside. The dollar yen would bounce and would rally significantly. If we have a really strong labor data tonight, we are expecting, at least 150 pips in terms of immediate reaction on the dollar Japanese yen. Euro USD and Pound USD, obviously they are still in a very strong technical uptrend. They might be limited in terms of their move there. Okay, so those are going to be the expectation for the reactions. I need to go straight into plotting out what our plan is for tonight. We do see the market pauses a little bit here. This is on the 50 minutes on the Euro USD. As you can see here, the market has already started pushing down lower. So this is in no way we can actually straddle this tonight, unfortunately. Even if we go into the hourly time frame, we do have, in terms of where our buy limit is going to be. Our buy limit is actually going to be a buy stop. Our buy stop is actually going to be 1.1125. This one here, I'm okay with placing that buy stop. The problem with this is I don't have a sell stop on this one here. We could be experiencing whipsaws as well. So if I can place the sell stop here, maybe closer to 1.1090, right? That's about it. That's in terms of where I'm going to be placing a buy stop and a sell stop. So we can still place this. I put more emphasis on the buy stop here. So if we have that weaker labor data, the Euro USD would just rally up. It would be a one-directional thing. But if we have a mixed data, then we might see a little bit of a whipsaw. So that's the risk we need to consider as well. We could get whipsaw tonight, but I'm willing to take that risk on the Euro USD here. So the buy stop is going to be at 1.1125. Sell stop is going to be at 1.1090. Pound USD, likewise, we can place a buy stop, but this one here, we're so close to. Okay, I'm not looking at the. Let's see. Yeah, there we go. So we have the buy stop here. Let me just cancel, delete this one. The buy stop is going to be at 1.32. Sell stop for this one here, we're so close to the release, we are going to have it at 1.3150. All right, just give it a little bit more room. All right, this two I'm okay to trade with. The dollar Japanese yen, I will trade after the news because it is a little bit risky. It does take a little bit more of an understanding to what it is. Aussie USD, you can have a buy stop. News is going to get released in 4 minutes. We still have time. The buy stop is going to be at 67.50. And for the sell stop on the Aussie USD, I do want to have it below 67.10 at least for the Aussie USD. So those are three trades. We got Aussie USD, Euro USD, Pound USD, Aussie USD, Euro USD, Pound USD. We can straddle this. New Zealand USD, I would pick one, Aussie USD or the Aussie USD or New Zealand USD, but just pick one on this one here. You don't really want to trade both of them. Straddle on this one here, you do want to have it a little bit higher. Minimum is about 62.30. Sell stop on this one here, you could have it a little bit lower. I would probably go with 6.62 cents on this one here, just to take that round number there. So 62 on the New Zealand USD for my sell stop. The buy stop is going to be at 63.30. Okay, gold, it's up to you. I'm not going to be placing a gold trade on this one here because this is extremely volatile, and typically we don't see that reaction in terms of how the flow is going to be. So just keep that in mind. You can straddle this, but I'm not going to be doing that for this session. But if you want to straddle this, you can straddle gold. The straddle point is going to be at 25.25. That's going to be a straddle point, 25.25. And for the downside, you could have it at 2503, 2505, about there. All right, you can have it there, but it's kind of really pushing it. You really want to have it about 2504 actually. All right, 2503.50, about there. It is a $25 gap on gold, so just be mindful on this one. I'm not too keen on gold for this one here. I think it's going to be an exaggerated volatility. Dollar Canadian here, I would actually avoid dollar Canadian because you can see the reaction on the dollar Canadian here. It's just a little bit on a dilly-dally situation here, but the overall trend for the dollar CAD is actually to the downside. I think we can trade the breakout here. That would actually be a close below 1.3442. But yeah, that would be on the daily scale. It's just too far away, and in terms of the hourly time frame, it's really hard for me to kind of position a straddle on this one here. Okay. Okay. Technical issues? Let me check. Since we go on my side, I don't have a drop on the bit rate. Let me go through the questions. Is it a huge thing? How's the stream? Is it okay? I would say try lowering your resolution on this one here. I think this is currently streaming on a 2K. Yeah, it's streaming on a 2K resolution right now. All right, this just got released, and okay, we got Euro USD. So I'm gonna cancel the other Euro USD so we don't get whipsawed. Unemployment rate 4.2. NFP numbers is actually low. Revised down even lower, 89,000. So we do have a little bit of a disappointment on the the NFP numbers, but the unemployment rate was actually pretty stable. So let me get rid of the pound USD. Everything else is still within boundaries. Yeah, it actually should point for a weaker US dollar. I'm actually going to close the Euro USD and pound USD. I'm actually going to reverse the position. So looking at the NFP numbers, it is lower. Last month's number was actually revised down, 89,000. New Zealand USD we got to buy, yeah, that's fine. And I just reversed the euro and the pound, should be okay. It should point for a weaker, labor market at this point in time. Unemployment rate, yeah, it does came down a little bit. Average hourly earnings was pretty high, 0.7 versus 0.3 expected. But yeah, Aussie USD just got triggered. I wouldn't fade it. I seriously wouldn't fade it right now. And we're running about 50 pips right now. Feel free to start moving your position, your stop loss to break even, please. Or if you want to get out, I would get out right now. If you just plan to just be here to grab it, right? Please feel free to skimper out if you want to. But yeah, dollar yen, probably not going to be taking dollar yen at this point in time because we still have that low soon, and we'll see if it breaks that low. But it is kind of one directional at this point in time. Gold, it is pushing higher on gold, but do keep in mind we're still within that boundaries there, about 25, 32, 33 on this one. New Zealand USD, good. Right, so yeah, feel free to get out right now if you want to close out your position. You might see market stabilizes a little bit once they start filtering some of the stuff here, but yeah, if you are happy with the profits right now, we got about 40, 50 pips right now. If you're happy with it, please go out, get out, and just enjoy the rest of the week. And the numbers actually mix, and I need to go through in terms of what's going on here. But yeah, I might see this one come back down a little bit, but I still wouldn't want to fade this. I think if we take a look at the last month's revision, that was actually really bad. Revision was from 112,000, 113,000. It revised down to 89,000, and the gain is 142. It's below 160,000. It's the unemployment rate that's actually stabilizing itself. So what will Mr. Powell pick, 25 or 50? Which is something I need to answer, right? You guys are probably going to be asking that. Yeah, can we try to fade it? NFP numbers below consensus but better than expectation. No, NFP number is actually below expectation. Expectation was 160. Numbers 142. We got a revised down from last month as well. Yeah. So yeah, hopefully you guys managed to get out from this one here. Others, if you want to stay on this one, feel free to stay. In terms of stop loss placement, though, it is a little bit too far to my liking. But you know, I probably wouldn't go any lower than 1.10 on the Euro USD. Pound USD, this one here, yeah, we were good on the Pound USD. I don't think there's any problem with the Pound USD. Target wise, I think we still have a lot of room on this one here. Again, I think we might actually see the potential for this one testing 1.33. Let me pull out this, right? Dollar yen, I would stay clear from the dollar yen at this point in time. We got support building up 142 to 141.75, so I would still be mindful on this one here. Whether or not we can actually fade or whether or not the market is actually going to reverse for a stronger US dollar, that's something we need to monitor for the next 30 minutes, right? Pound USD and the Euro USD, I think this is stable. We should still be on track for this one here. Euro USD, if it gains today, yeah, we could see a potential return to 1.12. On the Pound USD front, it's currently being capped by resistance 1. Probably going to be taking 1.3250. I think that's more than enough. So let me go back to this one here and set my target. 1.3250 was nearly hit. It was basically just 10 pips away from it. Euro USD. This one is a tough one. It's very hard for Euro to actually progress a lot higher on this one here. So if we take a look at risk reward ratio that we have here, 1.1150, I think we should have gotten out 1.1150, but you know, going by the current state, probably going to be looking at 1.11. Yeah, happy to go out with 1.1150, 1.1175 if you haven't managed to get out. But it looks like it's stabilizing. And for the Aussie USD, 67.75, 668, that would be the appropriate target level for Aussie USD. Maybe 10 pips lower, 67.90. Yeah, about there should be good enough. New Zealand USD, obviously spiking up higher than what we have here. Next up for this one here, it's probably going to be closer to 62.75, but it's still going to be limited at 63 for gold. Again, this is on the daily. If we take a look at it on the hourly time frame, it is kind of nudging up a little bit higher. It's going to be limited in terms of where it's going to be limited. You know, if you pro this one here and you already have a position, please set your target to 2,550, max at 2,565 for gold. Okay, but yeah, I can't fade this. I don't think we can fade this at all. It's not going to be a one-way ticket. Could be a one-way ticket. Could be. We'll see the reaction. Let me check on. Yeah, even Nasdaq is actually gaining right now. The US 30. Yeah, equities is not buying it. Right, futures on the equity side, it's not really buying it. You know, I would really suggest whatever profits that you have right now. We're running about 70 pips. Please take it out. If you want to stick to whatever it is, feel free. Just make sure you move your stop loss to break even. But I'm happy. I'm just taking it out. Done? Okay. Let's figure this out. Let me bring in the numbers here. This is the numbers, right? And I want to focus on this one here, which is the NFP numbers and the unemployment rate. This is the NFP numbers and the revision revised down to 89, which is low, and the breakdown on everything else is government payrolls is It's up from 1524. Manufacturing numbers was down significantly, 6 to negative 24. So we're losing a lot. We're losing 24,000 here. NFP numbers, private NFP employment obviously gain to 118,000. Participation rate is stable. Jolt's opening numbers was obviously lower than what we have there. But yeah, average hourly earnings was that huge jump there, negative 0.1 to 0.7. Average hourly earnings year on year also gained 3.6 to 3.8%. So overall, if we I think that beats the drop in unemployment rate. So I'm not looking at any reason why the market should actually be too happy with this. Fed, are they going to go with a 25 or 50 basis points? Close call. In all honesty, it is a close call because, again, it would come back to scenario scenario 2. NFP near expectation. No, it's actually below expectation. So we are looking at scenario number 4. The unemployment is stable. Unemployment, actually, we see the unemployment drop. So it's actually a little bit of a mixed number. Moderate labor data is actually a weak labor data. A weak labor data it's a weak NFP mixed with a gain in unemployment rate. But I would classify this as more of a stable unemployment rate. So it will actually fall into scenario number 2, in which everything else rises. Euro USD to pound USD rises slightly. I'm actually looking at scenario number 2 right now. Dollar yen experienced limited downside. Okay, so I think that's what we're looking at right now in terms of the dollar yen. I think it is going to be a little bit of a limited downside on the dollar yen. You can see that it's not progressing any lower on the dollar Japanese yen. Pound USD, no issues. It's still gaining. Euro USD, I would be more than happy to take it out, if you guys are still in that trade. Unless you want to transition into a swing trade, which I would say on Monday you can still swing trade it. This is a mixed number, right? In all honesty, we will actually fall into scenario number 2. This is not. Are we back? Okay. All right. Are we live? Just a quick sound check. Okay, I think it is live right now. I think we're back on point. Thank you. Okay, I have no idea what happened. Everything is fine. The connection is fine from my side. I think we have a little bit of a software issues in terms of the streaming software. Anyway, we're back onto the dollar Japanese yen, and again, this falls into scenario number 2. We do have concern in terms of how that dollar I'm actually really concerned right now is actually the euro yen positioning. So it could be dragged down. It really depends on. Okay, let's take a look at our mains that we have. The dollar Canadian, again, we have that bounce there. We bounced off 1.3450, support 3, 1.3470, and again, this is the problem that we have, with the market pricing in for a weaker US dollar to, oh my god. Yeah. No, it's not happening. This is the worst thing that could happen right now. Oh my god. And I just lost connection. All right. Okay. I think we're back. Okay. We are back. Obviously my stream is saying I'm going full speed. No, it's my side. It's on my side. I was having issues with the streaming software. It basically just dropped to red and then went off. Yeah, good. All right, there we go. As I said, we're sticking with scenario number 2. We're not fading anything. I don't really want to fade the US dollar at this point in time. The dollar Canadian could gain. The dollar Japanese yen, we are actually close to the support level. Shorting it or buying it, you're looking at 100 pip risk either way. Your stop loss is going to be 144 if you start selling dollar yen. 142 if you want to start buying it. I would not touch the dollar Japanese yen or any yen crosses at this point in time. Okay. Euro USD, we're looking at this dropping down, but hopefully you guys managed to get out. I think the last message that came out was take your profits. Did you guys take your profits? Hopefully you guys did, right? We did take it out in terms of the profits that we have here. But in terms of the Euro USD, what are we going to do with the Euro USD? This is, again, as I said, this is probably the worst case scenario. This is the most difficult scenario to trade if we have that mixed number. Are we going to go with that 4.2%? Are we going to take a look at the NFP number? It was so bad and whatnot. In all honesty, I think this actually gives room for the Fed to not cut by 50 basis points. I don't think they would cut aggressively. Probably hinges on changes in the CPI number as well. So if we have a higher inflation number, yeah, then it will be a confirmation they won't go with 25. If the CPI number drops down significantly, then yeah, they'll probably go with the 50. But again, the labor market, it's bad from an NFP perspective. But the unemployment rate, we didn't have any revision from last month. It went down to 4.2%. It is as per consensus. So I'm still pro US dollar. That's actually weaker. It's just that I wouldn't touch the dollar yen. So please do not trade the dollar yen. This one here there's a lot of risk tag on to that. Dollar Canadian, we're bouncing off 1.3450. It looks like it's also not over. I think dollar Canadian easier because I would focus with the trend line we have on the early time frame. That's actually a 3-point connect. So from yesterday's high to whatever it is today, if we have a close above 1.35, then yeah, you could actually start going long if we have that close above 1.35. Stop loss is going to be this, and yeah, stop loss is actually way too far. But we could target 1.3525. It's not really much, is it? It's only 20 pips. Nah, I'll just skip dollar Canadians. Probably not worth the time. Your stream just ended? Are you sure your stream ended? It's still good. If I rewatch it, I'll laugh so hard. I don't really want to rewatch it. Yeah. So I'm just sorry, guys. I'm just answering. Okay, so yeah, hopefully you guys have got everything there. But dollar yen, are we still live? Yeah, we're still live. Okay, so dollar yen, if you know what to do with dollar yen, do what you do. But I think the main focus for tonight is whether or not we should capitalize on the Euro USD. Obviously, a huge push to the upside, right? We're seeing this fade right now. I'm not too keen on fading this one here. I think to note here for the Euro USD is this is not that hard, right? If you don't have an ollie close below 1.10, you can buy closer to 1.10. That's basically close to the pivot. We've touched support 1. We've bounced off Ichimoku Cloud, so I'm still happy for this one here. But if you're thinking on going long on the euro, just make sure your stop loss is at 1.1075. Target level is going to be at 1.150. But if you want to go a little bit higher, 1.1175. That's probably more of a 1-to-1 risk to reward ratio. But for tonight, we managed to get out, right? Hopefully you guys managed to get out as well. I think in total for today was about 75 pips. You should be happy with it. That's already a huge gain in terms of combination from the trade we took on the Euro USD, the Aussie USD, and the Pound USD. So I'll leave this one alone here. I'll see what happens. If you want to trade, wait until the U.S. market opens. Then I would really want to see the reaction that the stock market is actually exhibiting. Right now, the US 30, it's gaining, but it's still below the pivot level there. So it actually needs to clear off 40,800. If it clears off 40,800, then yeah, it has potential for this to track a little bit higher. But it is going to be limited at 41,000. So just keep that in mind in terms of whether or not that's going to be a gain on the US 30. If it does close above the pivot level, next stop is going to be 41,000. That's basically going to be a cap limit. I don't think this is too interesting. Nasdaq is still pushing up higher, but we're not looking at a gain that's actually quite significant. Here's resistance for Nasdaq all the way up until the end of the session for today, up until the US close. So move to the upside is likely going to be limited. I don't think market is going crazy right now, pricing in for a 50 basis points cut. It's very hard for the market to price in a 50. I think we are looking at 25 basis points as kind of the cap there. VIX is actually pretty stable. It is still above 19,000, but we're not looking at crazy movement on the VIX there. S&P 500 is gaining a little bit, but on the general scale on the S&P 500, I think we're still looking at a little bit of a negative push on this one here. Cap on the S&P 500, we're probably going to be looking at around the current price level all the way up to about 5,550. But that's pretty much it. In terms of the stock markets, I think we're looking at a little bit of a mixed number here. We might see that gain happen. Again, if you want to start positioning for your trade, Euro USD, it's fine, right? If you target the right thing, I think it's fine. The stronger one, I would still go with the Pound USD. The Pound USD, again, the bounce was significant. There's a lot more room for this one to go. We can go for 1.3250. We can go for 1.33. Not really a big deal. The Pound USD, it's looking strong. It bounces off 23.6%. And if we still go back to the previous swing, 161.8%. is going to be at 1.3280, so very close to 1.33. Just limit yourself to about 1.3275 if you want to go with the Pound USD. So I'm okay with intraday maintaining a position on the Euro USD and the Pound USD. I don't think there's an issue on that one. But dollar Swiss, I would stay clear. And you can see what's going on here. It looks like the US dollar is actually weakening, but it's actually gaining across the board right now. And this is the dollar index, at least on the early time frame. All right, very sharp wick to the downside. It might attempt to push closer to 150, but really depends on the next 2 hours, right? If we have that momentum, yes, but hard to tell. Unemployment rate went down 4.3, 4.2. It's really tough. The NFP number, we got downward revision. It was up, but it was below consensus. What's the take on the market there? So I would actually avoid dollar Swiss. I would avoid dollar yen. I think the only two things that you can trade, or maybe three, would be the Aussie USD as well. Aussie USD, we can still target 68 cents. I don't have an issue with the Aussie USD going towards closer to 68 cents. Euro USD, still happy with the Euro USD. If you still want to trade on the Euro USD and you still have that position and you don't want to get out, move your stop loss to break even, right? Hopefully you guys managed to get out though, because taking out a 70 pips profit, that's good. We see a weak dollar. Isn't it priced in already given the projection showing the expected cut, and the NFP data is lower than expected, so the dollar is weak, right? The US dollar is weak, right? But market has already been fully priced in at 25 basis points cut. The number that was released just now, we have a drop on the unemployment rate. So we don't have enough reason to start pricing in that extra 25 basis points for a 50 cut. So it could actually rebound. The dollar it's a little bit of a mixed situation. The dollar yen also is going to be a limited run to the downside because I don't think there's any need to run to a safe haven. Euro USD and pound USD could actually gain. But yeah, am I pro weaker US dollar? I would say yes, but we don't have a clear cut reaction as if it's like a bad labor data. Okay. So now it depends on the CPI data. If you're looking for the rate cut, but I'll be honest, the rate cut is going to happen. Okay, no matter what, the rate cut is going to happen. It's just whether or not market is pricing in for that extra 50. But you know, if the cut is still going to happen, and the FOMC is still going to announce, yeah, we're still going to be cutting, you know, 3 times this year, 75 basis points cut. That's still good enough. That's still going to weaken the US dollar. Okay, it's just the initial reaction in the market right now. Just be a little bit mindful in terms of how the equity market could take this, because the equity market could take this and say, hey, you know what, we have a stable environment. They could push the equity up. You know, that would push risk assets up. That would all be great. But if not, you know, it's tough. Do not open until Monday. Would it be a wise choice? I don't think that's a problem because then you'll be trading post NFP anyway. So yeah, let's take a look at Nvidia. I don't think there's anything much to look at Nvidia. Yes, as you know, as per our webinars every single week, you know, I'm happy to still collect Nvidia as long as it's, you know, as long as it doesn't go down below 90. I'm still happy to collect this. Closer to 100, you know, still happy to collect all this stuff. Okay. All right. So obviously, again, you can take a screenshot of this one here and you can go through what we went through. But right now, leaning more towards scenario number 2. You know, NFP near expectation. Yeah, we see that gain. It's below expectation, but the unemployment rate is stable, and this is the reason why we look at dollar could stabilize. You know, modest losses, not really an extreme loss. You know, Euro USD and the pound USD gain, but we're not looking at crazy gains in the market, right? Dollar yen, you know, experiencing limited downside. Dollar Swiss experiencing limited downside. Dollar Canadian also limited downside. So if we take a look at this and we go with the scenario number 2, then, you know, Fed will likely proceed with a 25 basis point cut. Okay? So very cautious approach from the Fed. I don't think they're going to be pricing in for a good, complete, full 50%. All right. So let's wrap it up for tonight. This is going to be the code, Nonfarm 2024. And I do apologize for the technical problems that we have here. Code is Nonfarm 2024 to double your deposit bonus. And the next session that we have here is going to be Ethereum practice. So we'll take a look at how we choose when to straddle, when not to straddle. And that would be next Tuesday. That's going to be on the 10th. And on the 11th, we have our CPI numbers. Okay? Good luck to trade, guys. Have a fantastic weekend ahead. And I'll see you next week.